I don't think taking out 35 will lead to a $4 advance. I think it's going to lead to something that blows out the $50 very quickly, the old highs of history. So I think silver's sitting on a launch pad or a slingshot situation, and it's going to suddenly do something that would surprise people, and that is catch up and then advance more than gold on a percent basis. So personally, I'm watching gold because it's the mama, but silver looks like the wild dog that's going to vastly outperform gold. That's my bet.
The precious metals market in 2025 has undergone a profound transformation, with gold surpassing $3,400 per ounce, marking an important shift in investor sentiment as global economic uncertainties continue to mount. Renowned market analyst Michael Oliver notes that gold's breakthrough above the $2,000 resistance level, which had held steady for several years, signals a broader market realignment. This rally is especially significant due to the growing participation of institutional investors, who have increasingly reallocated capital away from equities and fixed income assets into precious metals, driven by concerns over the stability of traditional financial systems. While gold has dominated attention, silver remains notably undervalued in comparison. The silver-to-gold ratio has dropped to historically low levels, with silver now priced at just 1% of gold's value. This extreme mispricing suggests that a significant price correction could be on the horizon, as similar patterns have often resulted in rapid price movements for silver. Historical precedents, such as the 1979 to 1980 and 2010 to 2011 bull markets, demonstrate that silver tends to undergo sharp revaluations when the ratio narrows to these extremes. Technically, silver is approaching a key resistance level of around $33 per ounce, and a decisive break above this level could trigger a substantial rally, potentially propelling silver higher in the short to medium term. Although concerns persist regarding silver's reliance on industrial demand, particularly in light of economic uncertainty within the manufacturing sector, the technical outlook for silver remains strong. The market conditions suggest that silver may be poised for a slingshot move, where extended periods of price consolidation precede swift upward momentum once critical resistance levels are breached. If silver can break decisively above $35 per ounce, it could replicate the explosive gains of 2011, when prices surged from $30 to $50 in just 5 months. As silver's price moves toward these critical technical levels, investors will likely be watching closely as the potential for significant upward momentum continues to grow, supported by the broader macroeconomic environment and growing demand for precious metals. Now, we present the clips from Michael's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We've had so many breaks in gold since, well, we went into a trading range, we all know. In 2020, summer 2020, gold hit 2,000 plus, okay? And for the next couple of years, it kept going over 2,000 and dropping, 2,000 and dropping. And one time it even had a sell-off that took out some lows, got down to near 1,600. And that was a 20% drop from peak to low, which, think about it. Stock market does that quite often. Why is it the end of the world for gold? Well, anyway, that quickly was erased back to 2,000. In March of 2024, when gold was still around the 2,000 level, so meaning this resistance level, we said, this time it's for real. You're going up. You're going to accelerate, at least more so than you have been for the prior 3 years. And it did. You went up to like 2,400, and then you pull back, and then you have these monthly stalls where you, for 3 or 4 months, it does nothing. And everybody thinks that's the top. So it's fooled people all the way up. And we argued with this recent break, which was very sharp. In fact, it was like 2 days. If you go back to the drop from 3,500 down to the 32,000s was like mostly in a 48-hour period. And now we're back, pushing the old high close was like 34.25. So we traded up to that level today. Didn't close, not that it matters. But the one we think gold has still got a lot more to go. And that from now on, the type of breaks you're going to get will be more like this one and probably less so in percent-wise. And this wasn't that big of a percent drop anyway. It was like 9%, I think. And before you knew it, it was over with. A lot of the other corrections over the last year have dropped and then laid there for 3 months and, scared people. This time, I think they'll be more rapid and you'll make a new high. Quick drop, new high. And that's going to shake people out all the way up, unfortunately. The one we still think, and now I love it because Goldman Sachs says I'm wrong, silver. Silver is underperforming gold. It has been, especially since 2023. The spread was at a certain level and it has staircased down and it got under 1%, meaning you divide an ounce of silver to gold, it dropped to 1% and less, where it is right now, of an ounce of gold. And if you go back historically, you know that is dirt cheap. I mean, that's been seen several times, and it's always a buy, by the way. But it's like, what do you think it's going to do? Go to zero? Okay. So I mean, the relative performance of silver to gold has gotten to an extreme low that has occurred before, and we still think, based on technicals, not the fundamental assessments that Goldman Sachs came out with just the other day, saying that no, silver's never going to gold's not going to be matched by silver, period. And they cited some fundamentals and so forth, which is fine and dandy, fundamentals that shift every year type of thing. We're looking at the technicals, and the technicals tell us, no, this pullback has structure above it to break out through, and it won't take a lot to do so. In other words, a very small percent up gain in silver versus gold from where it is now. And if you plot the spread relationship between silver and gold, especially run momentum of it, you'll see, oh, this is ripe for a breakout. You've got a structure that would impress you if you looked at the momentum. If you look at the price of silver also, silver made a high at 30, or about 33 back in May of last year, a full year ago. Where are we trading now? 33.30 today. So we're basically where we were a year ago. After that May high a year ago, it dropped, came up, then made a new high at $35 in October, and again dropped down close to 30. Then in March of this year, got up to 35 again, and again they sold it at the two peaks now at 35. And you dropped down so hard in that panic, and erased it almost immediately, by the way, that you swept some prior obvious price chart lows, the kind of things that a guy with a price chart would say, oh my God, it's all over. Okay, fine, good. Bear trap. Next thing you know, silver's back up to 30, 31, 32, 33, and even, July silver, which is now we call the front month, traded up to 34 a week or two ago. So now, is it the front month so far? The high has been about 33.80, I think. We're trading 33.35, 33.40 today. We think if you ever get back up to 35 again, and I think you will, price chart is then back to what we call a triple top, if you have a point and figure chart. Well, silver doesn't stop at triple tops. It doesn't even stop at double tops. It sets them up. It becomes not a double top, but a launch pad for a new leg. If you return to that launch pad again at $35, it's not breaking out at that point. It's up to the triple top, quote unquote. But quarterly momentum, which we plot in various forms, has a 1 year long gradual downtrend tube that is so perfect that if you looked at that momentum chart, you would say, ooh, this is something you could break out above. You get up to 30, even the high 34s now, I'm going to break out of that channel on momentum that says I'm engaging. And I think at that point, not only will momentum engage, but silver will blast out the 35 level. And this time, I don't think taking out 35 will lead to a $4 advance. I think it's going to lead to something that blows out the $50 very quickly, the old highs of history. So I think silver is sitting on a launch pad or a slingshot situation, and it's going to suddenly do something that would surprise people, and that is catch up and then advance more than gold on a percent basis. So personally, I'm watching gold because it's the mama, but silver looks like the wild dog that's going to vastly outperform gold. That's my bet.
The US dollar index has broken through significant long-term technical support levels, falling from around 110 in 2024 to below 100 in 2025. This breakdown on annual momentum charts suggests the potential beginning of a major bear market for the dollar, a scenario that has historically been correlated with strong performance in precious metals. As market analyst Michael Oliver highlights, The dollar's breakdown below 100 signals a multi-year bear trend. This marks the first major annual momentum breakdown since 2015, pointing to the possible start of a new secular trend in the currency markets. The erosion of the dollar's value could result in a structural shift in global investment dynamics, with significant consequences for the broader financial markets, particularly in commodities and precious metals. For international investors, the weakening of the US dollar compounds the negative performance of US assets, making it an even more challenging environment for those holding dollar-denominated investments. Foreign investors are not only dealing with losses from declining asset prices, but are also facing the erosion of their capital due to the depreciating value of the dollar. This dual effect creates a strong incentive for international investors to seek alternative stores of value, such as gold, silver, and other precious metals. As the dollar continues its downward trajectory, the appeal of precious metals, which historically perform well in times of currency devaluation, is likely to increase. Let's get back to the video.
Government debt and so forth is off the page, and at some point that derails, or you have to reinvent reality in some way. So it's not something that simply mildly goes away over time. So it could have an event of its own, and it's obviously a huge asset category. But the other factor you mentioned was the dollar. And if you're a foreign buyer of U.S. bonds or a foreign buyer of U.S. stock market, and I understand for people who measure this stuff that foreign investors in the stock market in the last couple of years have gone off the page. Never seen so much foreign money invested in the U.S. market. They not only got gut kicked by the stock market drop or the T-bond drop recently, but they got gut kicked by the fact that the dollar, 4 or 5 months ago was 110. It's now trading at 99. And even back in March, it was trading over 104, and now it's 99. So it's even just then a 5% drop. You add that to the negatives of the stock market drop, and you, a foreign investor, getting hurt far worse than an American investor, because he tends to ignore the underlying real value of his money in it. So that's a wave factor, and it hasn't been. The dollar index, 2022, 23 and 24 especially, was an exceptionally narrow range, 7% range, up, down, going nowhere. And that means the euro and the yen, which constitutes 71% of the dollar index, were effectively doing the same thing, going nowhere really. So they weren't a wave creator. They weren't creating negatives or positives. Now they're creating negatives. So we assess the dollar in the recent drop has blown annual momentum going back well more than a decade. And therefore a major, and even on price, they tried to hold, you don't see it here on the right, but those levels you saw in 23 and 24 were, they traded down to 100. Your closes didn't, but they actually traded there. Yeah. Well, we broke below that decisively, got even down to 98, I think, recently. And then they tried to bounce recently, but even price now, our annual momentum broke up there at 104. You see a little jiggle up there? Yeah, we turned major negative right there. But now it's gone further, and it's, as far as we're concerned, this is the onset of a major bear trend. Well, that's going to have domino effects in other asset categories, as I mentioned. The bond market has fooled us to some extent. In October of 2020, we turned major bearish on T-bond futures at 30-year bonds, long end. They were at 170 at that point. And a year and a half later, they finally really started to come down hard, not just incrementally, but they almost like had a crash type event. They made a low in 2022, meaning a high in yields. And they basically did this 22, 23, 24, went sideways in a range that looked like, oh, they're basing. Okay. Problem was that break, when it occurred in 2022, broke annual momentum of T-bonds, meaning you could go back a decade or so and see on momentum that you just blew a structure from hell. Okay. And the yield guys could see this on long-term yield charts too, where you broke out over a major downtrend line. So you did extreme damage to the prior trend, meaning the trend toward lower rates. And so it's not something you just, dust yourself off and turn around and go up again, meaning drop in yields. There was a technical situation back late last year, early this year, where we thought the T-bonds could do their normal thing, and that is when the stock market starts to look vulnerable to asset managers, as it did, that the T-bonds would be viewed as an alternative place to be. And this has been valid and useful. The 2000 to 2002 drop, the 2007 to 9. If you own T-bonds, they went up. Yields went down. Great. So did gold. So it was T-bonds and gold were the alternatives. But the gold's been proving it's an alternative.
Many analysts are optimistic about the future of both gold and silver in the coming months, driven by global economic factors and shifting investor sentiment. Gold is expected to continue its upward trend as ongoing inflationary pressures, economic uncertainty, and geopolitical tensions fuel the demand for safe haven assets. As investors seek stability in uncertain times, gold's value as a store of wealth is likely to strengthen, propelling its price higher. The growing interest in gold from institutional investors and central banks further supports its positive outlook, positioning it for continued growth shortly. Silver, while often trailing behind gold in recent years, also shows strong potential for growth. Analysts suggest that as demand for precious metals rises, silver is poised to benefit from its own set of drivers. Increased industrial demand, particularly in electronics, renewable energy, and electric vehicles, is expected to increase silver's value. Silver's role in these industries becomes even more significant as the market shifts toward more sustainable technologies. Moreover, as silver historically tends to follow gold's movements, it is likely to see price increases as gold gains value. That's it for today. Share your thoughts on Michael's analysis in the comment section below. If you find this video informative, don't forget to support and turn on notifications to stay informed about our latest videos. See you in the next video. Thanks for watching.